Hey there, hope you're doing great today. I thought I would do a quick video to share with you some of the more common patterns I've been observing on deals lately, and really for me these are more common reasons as to why I have chosen to pass on those deals or sit those out. Of course, each deal is unique, and sometimes it's a combination of those things that I'm observing, not just one thing or one factor as to why I may decide to pass. But number one is rents. I'm noticing that rent assumptions may be perhaps a little bit more optimistic as it relates to the current market, without perhaps taking into consideration local supply and demand dynamics, which may result into perhaps flat rents or much lower rent growth in year one. And then number two is selecting the proper comp set, sometimes observing maybe class A properties being sprinkled into the class B comp set, or class B properties sprinkled into the class C comp set, which will inevitably change the pro forma or impact, right, the pro forma rent. Number two is reserves. Believe it or not, I still see deals with a very small rainy day fund or operating reserve. My risk criteria usually call for 6 months of OPEX and debt service, or that roughly translates to 9 to 12 months of operating expenses. If I see anything less than that, I get uncomfortable unless there are a ton of other cushions built throughout the deal structure. But I still see a ton of deals with 1 to maximum 3 months of operating reserves, which is very thin, especially in the current environment, where a lot of things, as we've seen in the past couple of years, as it pertains to expenses and interest and whatnot, have gone up. And number three, which is really the most controversial of the three, is the cap rates. I'm seeing a lot of deals with exit cap rates that are declining or from where the market is today. In other words, they're projecting lower cap rates. And I understand that this may be predicated on that sponsors or operators' outlook on the market and outlook on interest rates. Of course, I have mine and happy to discuss this one off with you, but bottom line is I don't know where the market is, and I don't want to be in the business of predicting the market or interest rates. Therefore, I'm choosing to take a more conservative view and continue to assume at least slightly higher exit cap rates, or at best flat rates, to the extent local market dynamics and the deal underwrite warrant that. So that's it. As usual, our videos are for educational purposes only and do not constitute tax, legal, or investment advice. And I'm just sharing with you my own experience, my own view, which is all predicated on my own risk tolerance and investment criteria, which of course may differ from yours. But if you found the video helpful, please like, share, and subscribe, and have a great day.